All right, so you now have a basic understanding of the elements which make up the four formations. Two of the formations are bullish, that's a drop-based rally and a rally-based rally. And then two of the formations are bearish, which is a rally-based drop and a drop-based drop. Now in this lesson, we'll implement a method to systematically draw the zone lines around the base. Now this is referred to as a base isolation technique, and it consists of 3 simple steps to help you mechanically draw out the zones. Now this technique will help with identifying the elements of the formation in order to classify the type of zone formation that it is. It'll help you draw the proximal and distal lines around the base, and finally it'll help you evaluate the overall quality of the zone formation. And we'll have a chance to look at examples of both a demand zone and a supply zone. Now to draw out demand zones using the base isolation technique, the first step is to mark off the leg out. Okay, so you're going to go from right to left and locate the leg out of the formation, which in the case of a demand zone is going to be a rally. Now a rally can be a gap up, it can be one tall big green candle, or it can be a series of candles with consecutive higher closes. So from there, you're going to move down and left until we come to a base candle at the bottom of the rally. We're then going to draw a vertical line on top of the leg out candle of the rally following the base candle. Okay. Then the second step is to find and mark the leg in candle. Now to do this, we're going to continue moving left on the chart, candle by candle, until we find the leg in candle leading into the base or the zone. We're then going to draw a second vertical line on top of the leg in candle prior to the base, and everything between these two leg candles will make up the base of the demand zone. Now that the base has been isolated between the two vertical lines, we can easily apply the third step of drawing the proximal and distal lines. Now, whether the formation is a reversal, such as a drop-based rally, or if it's a continuation pattern, such as a rally-based rally, based on which one it is, that is going to determine where we place the distal line, okay, of the demand zone. Now, by isolating the base, we can see we have a drop on the way in, then we have a base, and then we have a rally on the way out, giving us a drop-based rally or DBR. Now, soon we will discuss how to appropriately place the proximal and distal lines in lessons to follow. But once you've got your zone drawn, go ahead and delete the vertical lines afterward. Now we'll go over the process for a supply zone. We begin with locating the leg out, which in this case, in the case of a supply zone, it's going to be a drop. So remember, a drop, like a rally, can also be a gap. It can be one tall red candle, or it can be a series of red candles closing consecutively lower. And actually, the candles don't have to all be red, as long as they're all closing consecutively lower. But anyway, once the leg out is identified, we continue to move up and find the base candle or base candles at the top of the drop. And then we're going to draw a vertical line on top of the first leg out candle of the move out that follows a base candle. And I'm going to illustrate this once we get to the end of the summary. But anyway, step 2, locate and mark off the leg in. And to do this, we continue to move left on the chart, candle by candle, until we run into the leg candle leading into the zone prior to the basing candles. And once we've identified that, we then draw a second vertical line on top of the last leg in candle prior to the base candles. Now the candle or candles between the two vertical lines make up the base of the supply zone. And the third step after isolating the base with the vertical lines is to draw the proximal and distal lines around the base. Now the type of formation, whether it be a reversal such as a rally-based drop or a continuation pattern such as a drop-based drop, this will determine where we place the distal line for the supply zone. Okay, by isolating the base, we can now see we have a rally on the left side, we have a base, and a drop on the right side, resulting in a bearish reversal formation which we refer to as a rally base drop, or RBD. Now, we will learn how to appropriately place the proximal and distal lines in lessons to follow. But again, once the proximal and distal lines have been drawn, we can delete the vertical lines. Now, this simple set of guidelines will help us mechanically isolate the base of any supply and demand zone. It will help us identify the type of formation that it is, and it will help us draw the proximal and distal lines around it. So what I'm gonna go ahead and do is pull up a chart, and I'm just gonna run through a quick illustration of how to identify the base and candles, as well as the drop, the base, and the rally. All right, so we have, looks like this is a 1-day chart, which is fine. Let's zoom in a little bit, see if we can find a decent formation here. Let me drill in just a little bit closer. Try the 15-minute. Let's see what we get here. There we go. There's one. All right, so there's actually a few here. So if we look at this formation, we see there's a rally up, base, and then a drop. So this would be identified as a rally base drop. So in this particular platform, they have a line, it's called a timeline. We can place a line there. We can place a line there. And then we have this one candle here, which would be our basing candle for a supply zone. Okay? Now let's get rid of that. And we can actually see another one for a demand zone. If we look at this formation here, this would be our leg candle in. This would be the base candle, and this would be our leg candle out. Whereas over here, this would be our leg candle in, and this would be our leg candle out. This would be our rally, base, drop, and this formation here would be a drop, base, rally. Okay, so we have this one here. We can do that to isolate the base. And then we would draw our zone like so. Okay? Let's see if we can find any others. Let me get rid of all these lines. Bear in mind, once you get the hang of this, you're going to spend most of your time identifying these formations. Now, after the drop, base, rally formation that we identified here, we also have a rally, base, rally here. You see that? So we can then take our line. This would be the leg in. This would be the leg out. And this would be our zone. Okay? Now remember, generally demand zones in this particular program are going to be green, and then supply zones are going to be red. Now, this is all in relation to current price, so try to ignore that for now and just basically focus on the method that we're using to identify the zones, okay? All right, let's see if we can find a drop, base drop. And actually, no, that's not one there. Let's see. Here we go. Here's a drop, base, drop. So we have drops here, bases a little bit, and then drops again. Okay, So let's see. This would be the leg in. And this would be the leg out. And then this would be our zone. Okay? And actually, we might even include that candle as part of the zone. Okay? So anyway, get used to identifying your leg in, leg out, and then get used to your bases, and then get used to identifying the various formations on the chart. Okay, now in the next video you'll have an opportunity to go through pretty much a lab exercise, and you can begin practicing drawing these out yourself using the base isolation technique. Hope to see you in the next video.